There's further relief for homeowners with the Reserve Bank cutting the official cash rate by 50 basis points to 4.25%, the lowest it's been since 2022. That's the third cut in a row, but borrowers banking on more big falls next year may be disappointed, as Grace Thomas reports.
This is Mitch and Ashley's little slice of paradise in East Auckland's Kawakawa Bay, their first home. They bought the property in 2020 when interest rates were at record lows.
A dream for us to actually get the house that we wanted. Didn't expect it out of the blue, and it's amazing. You know, we've been here 4 years now and absolutely love the place.
But since then, interest rates have just kept rising, and keeping up is a struggle. They're about to refix their mortgage, and today's OCR cut comes as a big relief.
Really giving us hope because we're trending in the right direction. It gives us insight as to what we could potentially start planning to do going forward rather than necessarily what we're going to do tomorrow.
We do want to do things to the house, and that just makes that a little bit more flexible for us to be able to plan for that. It won't obviously happen straight away, but it means that we can start saving for that.
The 50-point cut is the third since August, which has seen the OCR drop from 5.5% to 4.25%.
50 felt right, and particularly with a forward track that leaves the door open for a further 50 if the economy pans out as anticipated.
Several banks were quick to react, with Westpac, Kiwibank and ASB immediately cutting variable lending rates. Finance Minister Nicola Willis welcoming the news.
To give one example, a family with a 25-year $500,000 mortgage could expect to be about $180 a fortnight better off than it was just a few months ago if its rate dropped from 7 to 5.75%.
And she's chalking it up as a win for the government.
We promised that with careful fiscal management, we'd get inflation back under control. We have. We promised that when inflation was back under control, interest rates would drop. They are.
It's not all good news though. Falling interest rates are the result of falling inflation, and that's because of reduced spending. Retail New Zealand's latest data shows that spending across the country is still down, which may lead to further unemployment. The Reserve Bank is predicting the unemployment rate to hit 5.2% by March next year.
Economic growth is expected to recover during 2025 as lower interest rates encourage investment and other spending. Employment growth, however, is expected to remain weak until at least mid-2025, and for some, financial stress will take time to ease.
This was the last OCR announcement for 2024, with the Reserve Bank predicting a slower rate of cuts next year. But for homeowners like Mitch and Ashley, they're just grateful it's going in the right direction.
Well, joining us for more analysis of today's OCR announcement is Infometrics Principal Economist Brad Elson. Brad, thanks for joining us. So a cut of 50 basis points, it was widely expected, but were there any surprises in the Reserve Bank's forecasts?
Yeah, you're right. We did expect a 50 basis point cut to the official cash rate, and we got that. I think probably the biggest surprise was just how much there is still quite a big open question over what happens next to the official cash rate. The Reserve Bank has sort of tightened up just how quickly it expects, or it's forecasting, the official cash rate might be cut next year. But again, some big questions, a lot of uncertainty over where those next steps are. Also, a bit of a shift around in just how high the Reserve Bank thinks the unemployment rate will get and how much potential they think is left in the economy and there will be in the future. So still a lot of movements, but the sort of central direction of travel is still very much there. Interest rates are coming down, and that's because inflationary pressures are not as intense. That's not expected to change, and that was a relief to see that the Reserve Bank still fairly confident about the inflation sort of outlook. But long story short, interest rates coming down, will be further cuts next year, but still an open question of how big and how fast.
Brad, we know it is really tough out there. Unemployment's rising, costs are remaining stubbornly high, people aren't spending, businesses are hurting. What impact will today's cut have?
We've already seen a few of the banks that have cut some of their variable mortgage rates and similar, and we'll be likely to see a few more cuts to actual mortgage rates as well over the next couple of days. Realistically, it's still going to take a bit of time for these lower interest rates to fully hit the economy. People don't refix their mortgages overnight. But over the next 6 months, and this is the point the Reserve Bank has highlighted as well, over the next 6 months, a lot of households are going to refix onto those lower mortgage rates. At that point, they're going to have a bit more free cash flow to spend out in the economy, and they are likely to spend it. That will stimulate better business activity and hopefully more hiring over time. So difficult conditions, you're right, at the moment, but expectations for better things to come in about 6 months' time as those lower interest rates really start to hit the economy.
Yeah, and you touched on this earlier, but do you expect the Reserve Bank to keep cutting next year? What have they indicated? And what are the risks around that?
Yeah, I mean, a lot of questions around sort of the forward pathway for interest rates. Now, most economists sort of were thinking that into 2025, the Reserve Bank might have to sort of slow things down, taper it back a bit to more 25 basis point cuts rather than 50, and have quite a few of them scattered throughout the year, probably another 3 or 4. The Reserve Bank Governor, though, Adrian Orr, did highlight in the post-monetary policy statement media conference that it almost appears that 50 basis points might well be sort of the base case for February. So another cut coming through on the 19th of February, the next time the Reserve Bank meets, because they have quite a long summer period. And then we would expect further, probably smaller 25 basis point cuts through next year. The question is where they end. Do they end around sort of 3.5% OCR, or do they go a bit further down to 3? I'm not sure they quite know yet, nor do the rest of us. So some questions around that timing and where they end out, but there does seem likely to be further cuts in 2025. The question will be, given where you've seen international interest rates and similar go, just because the official cash rate comes down doesn't necessarily mean that people's mortgage rates will fall one-to-one as we head forward. Still a lot of uncertainty out there over the future pathway for Kiwi interest rates.